Hi, everybody. I'm Megan, your mortgage mom, and we are talking all things credit today. So, whether you have no credit and need to build credit, or you need to work on and fix your credit or increase your score to buy a house, this video is going to be for you. I'm going to share my screen and get right into this PowerPoint. And keep in mind, I'm a loan officer. I'm not a licensed credit repair counselor, but I do see credit all day, every day. I always say I know enough to be dangerous. I dug myself out of some serious credit debt and learned the hard way. So I just want to share some things that I wish I would have known when I was younger, or even now as I get older, I learn new things every day. So it's really nice just to share. So we're going to break this down into 3 steps. Step 1 is to check your credit. We don't know what we don't know, right? Obviously, if you don't have a credit score and you don't have any credit and you've never used credit, you still need to check your credit to make sure no one else has used it. We've all heard the identity theft scares, so we need to check our credit at the very least on an annual basis. You're able to obtain a free credit report online once per year. We want to check it for accuracy because 1 in 5 people have errors on their credit report. We don't want to be one of them because when we go to apply for a loan, if there's an error on there, it could be really detrimental to you. So we want to make sure we're keeping up with it. And how you can track this, not only with your free annual credit report, but most banks or credit card companies will offer some type of credit monitoring and for free. Now, keep in mind, it's probably not going to show you every single detail. It's not going to show you all 3 credit bureaus. It might just show you one. And the credit score that they're monitoring might look a little bit different than when you go to apply for a house or a car, because different credit companies use different algorithms that calculate your score, but it will be ballpark and be somewhat close. In my opinion, I don't think it's necessary to pay for credit monitoring because there are so many free programs out there now. So definitely check with your bank and your credit card. I personally bank with Chase, and I have some free credit monitoring there. Consult a professional. If you do find errors, consult a professional. Don't just dispute every single account because that's what your friend told you to do. Everybody's situation is different, so you definitely want to consult a professional. You can always reach out to me. I can point you in the right direction of a credit repair company, or maybe it's something we can take care of and help you with for free. It just depends on the situation. No situation is the same. Freezing and unfreezing your credit report is also a tool that not a lot of people know about. You can go to the 3 credit bureau websites, Experian, Equifax, and TransUnion, and freeze and unfreeze your credit report. This can prevent fraud, and it can be a little bit of a pain because you have to log into all 3 websites each time to unfreeze your credit report every time somebody needs to pull it. So if you're coming to me to purchase a home and you're filling out a loan application and we need to do a credit check, you would have to log into all 3 credit sites and unfreeze your report. But at least it does prevent fraud. So that's something, if you're not applying for credit anytime soon and you have your credit established, freezing it might be a good idea for you. This is a cool chart that just shows you the factors that make up your credit score and some other cool statistics. I'm just going to focus right now on factors that make up your credit score, because everybody's always asking me, well, how did they come up with my score? How do I increase it? Well, this is how. 35% of the algorithm that calculates your credit score is made up of your payment history. Are you paying on time? You paying your bills on time and your credit report is your consumer report card. 30% is credit utilization. How do you use your credit? You have $1,000 credit card limit and your balance is continually $1,000 and you're maxed out. That's not good credit utilization. We want to keep our credit utilization at 30% or below of the limit. So $1,000 credit card limit means your balance should be $300 or below to give your score the most bang for its buck. 15% is the length of credit history. So sometimes the best way to build your credit is just time. So if you're a young person, be patient. It's going to take a few years to build strong credit history and credit depth. Okay. 10% is credit mix, so the types of accounts you have, and then 10% is new credit, or if you've heard the term credit inquiries, that makes up only 10% of what calculates your score. So yes, when you apply for a mortgage or any loan for that matter, we have to pull your credit. Now, in my opinion, the only time credit inquiries can really negatively impact you is when there's several. So if you're applying for a car, a credit card, a home loan, all these things all at the same time, and you're opening new credit accounts, that impacts your length of credit history and the inquiries on your credit. So you're that's what's going to have the negative impact on your score. But again, some cool statistics on there. You can always reference it back in this video if you want to review. Step 2, pay on time. Seems silly, like, duh, Megan, right? But no, really pay your bills on time. Your credit payment history, like we just talked about, makes up 35% of your credit score. Creditors will not report a late payment until it's 30 days late. So keep that in mind. If your payment is due on the 1st of the month and you pay it 2 weeks late on the 15th, yes, you might be assessed a small late fee, but it is not going to credit report and negatively impact your credit score until it is a full 30 days late. So sometimes it happens, life happens, you make a payment late, not a big deal unless it's 30 days or more late. Obviously, we don't want to continually get in the habit of that because those late fees add up and it's kind of just junk fees you don't want to pay. It's lighting money on fire. We don't want to do that, but at least it won't negatively impact your credit. The the creditors will report to the credit bureaus 30, 60, and 90-day late payments. Obviously, 30 days is better than 60 days. 60 days is better than 90 days. 90 days is going to have the most impact negatively on your credit score. So paying your bills on time is the most effective way to increase your credit score. One late payment will drastically reduce your score. How much it reduces your score is different for every person. It can be 20 points. It could be up to 60 points. A mortgage late payment can tank your score about 100 points. So it just depends. There's no black or white answer to how much it will tank your score, but it will be a lot. The only way to combat a late payment is with other positive credit outweighing that bad credit. We need positive to offset the negative. And then we want to make sure we're paying bills. If we do have a late payment, it is what it is. Sometimes you can negotiate with the creditor to try to get it deleted. So very rarely does that happen, but it can. So what I recommend, if you can't get it deleted after calling the creditor, the best thing you can do is just pay your bills on time and let time heal your credit report. It's going to take about 6 to 12 months of on-time payments to see your score kind of bounce and come back from that. Step 3 is increasing your credit score is to reduce credit balances. So we want to pay down our balances to 30% of the limit or below. That's responsible credit usage. We want to avoid opening multiple new accounts. You don't need several new accounts. Too many accounts will negatively impact you. You don't need to open a credit card at every store you go to save 10%. In fact, that's what you shouldn't do. We want to maintain a mix of credit types. For every installment loan, I recommend no more than one credit card. And by installment loan, I mean mortgage, car payment, student loans, any payment that you make regularly on a monthly basis consistently is an installment loan. So if I have a mortgage, a student loan, and a car payment, that's 3 accounts, I should not have more than 3 credit cards. We don't need those store cards. There's a reason that the sales and marketing teams push those is because they get you to spend more money. So giving you some best practices and tips, if you're building credit from scratch, you might be watching this saying, I'm a teenager, I don't have any credit yet, or I'm about to, or maybe you're a college student, or maybe you're in the older generation and you just don't have any credit. And now you need to go out and get a loan and your loan officer like me says you need a credit score. If you're building credit from scratch, a secured credit card is backed by a cash deposit at your bank and the best starting place, in my opinion. You can go to your bank or credit union, open up a secured credit card, and basically they might start you off with a really low limit. Use it for a tank of gas or just something small. Wait for the statement to come in the mail, then pay it in full every single month when the statement comes. You don't want to use it and pay it off every single day, although responsible because you're not carrying debt, it's not going to credit report. Whatever balance is on the statement when it drops, whatever day of the month that is what will report to the credit bureaus. So if you have a card with $1,000 limit and your balance the day the statement comes out is $1,000, it will report to the credit bureaus maxed out. Okay. You can also be added as an authorized user to help build credit. So keep in mind that debt will show on your credit report as if it were yours. So yes, if you're added as an authorized user to a spouse's account, your parents' account, anything like that, that will show up on your credit report too. So all their positive credit history attaches to you, but also the debt and the negative credit history could attach to you as well. So be careful with that. Definitely consult a professional before doing anything like that. Try to pay off your account in full each month to avoid interest. Obviously, that's not always possible, but we never want to just make the minimum monthly payment if we can avoid it, because paying interest on these credit cards can be as high as 22.8% or even higher. I've seen up to 30% actually. So to give you a quick example, that $1,000 balance you have on your credit card at 22.8% interest, if you're making only the minimum monthly payment, let's say the minimum monthly payment is $35 for this example, and you just pay $35 a month on that $1,000 balance. You're not using it, you're not adding to it, nothing. It would take you 41 months to pay off that credit card, and you would pay $422 in interest. Your balance was only $1,000. So you just wasted $422 in interest. So that's how interest works on credit cards. It adds on there monthly. So you're going to see on your credit card statement, you should be checking your credit card statement for usage, not only for fraud purposes to make sure nobody's fraudulently using your card, but you need to make sure and see how much interest you're paying. That is money that you are lighting on fire. It adds up fast. Pay off your debt. Start with the highest interest debt first. Make a dent in that. Get rid of it because we don't want to pay interest. That is what keeps us from saving. Okay, so definitely these are just, again, some best practices and tips I've learned over time. If you have collection accounts, this is something I didn't put in a bullet point, but if you have collection accounts and things and you know they need to be paid, you can also negotiate with the collector. Like, hey, let's say you have $1,000 balance on an old collection account and you only have $800, they may settle with you for $800. So I definitely recommend talking to somebody before you just start throwing money at things, just to get some guidance and some better advice. So any resources, there's a QR code on your screen, or the link in my bio on my Instagram or my Linktree. There's lots of tools on there, free budget templates. And then I'm also including the resources. This is where you can get your free credit report annually, and also the websites to the 3 credit bureaus, Experian, Equifax, and TransUnion. So that's where I talked about you can go to create accounts to freeze and unfreeze your credit. And there's definitely some resources and tips and tricks on those websites too. The biggest thing is to get educated. Don't go at this alone, and don't let one mistake set you back. If you have questions, you can contact me, reach out to me anytime. My phone number and email are on the screen. You can follow me on social media at Megan Wetland. Listen to my podcast, Mortgage Mom Wines. I share all kinds of financial tips and tricks on there as well. And again, here if you need me, I'm your mortgage mom. Thanks so much.